Welcome to The Explainer. Today, we're diving into something really mind-blowing. We are unpacking a financial phenomenon that has literally rewired an entire economy from the ground up, India's digital payment revolution. If you've been tracking global fintech at all, you already know this isn't just some minor tech upgrade. We're talking about a total fundamental shift in how over 1 billion people handle their money every single day. So grab your coffee, settle in, because we're going to break down the exact mechanics, the underlying tech stack, and the massive real-world impact of this whole system.
All right, here's our quick roadmap for today. We're kicking off with the digital payment revolution, then decoding how to choose the right transfer, taking a peek behind the screen at PSPs and TPAs, exploring the infrastructure of success, and finally wrapping up with some global lessons in financial inclusion. Let's get to it. Starting off with Section 1, the digital payment revolution, from zero to billions.
Okay, just to wrap your head around the scale here, consider this contrast. When the Unified Payments Interface, better known as UPI, launched back in 2016 under Dr. Raghuram G. Rajan, it was slow, really slow. For the first 3 months, transactions were practically at zero. People just loved their cash, But fast forward to the period between April 2022 and May 2023. Are you ready for this? India recorded a staggering 133 billion digital payment transactions. 133 billion, that is just incredible. And looking at this, you can see it wasn't just some gradual, slow burn adoption. After that initial flatline in 2016, it's like a switch flipped. A massive snowball effect completely takes over as we head into 2020 and beyond. It's like it became a daily habit for millions practically overnight, fundamentally slashing the entire economy's reliance on physical cash and paper checks. Moving on to Section 2, choosing the right transfer, decoding the alphabet soup. So to really understand this digital economy, we got to decode all these acronyms. These four main systems exist because, quite simply, different transactions need different balances of speed and volume. You've got UPI, right, which is your go-to for instant, everyday micropayments. Then there's IMPS, a real lifesaver for urgent 24/7 transfers of medium amounts. Then you have NEFT. Now, NEFT operates in batches, so it takes a little longer, which makes it perfect for your routine scheduled bills. And lastly, RTGS. This one is a real-time system built specifically for moving huge, massive sums of money. Let's ground this with a real-world example. Say you're popping into a cafe to grab a 450 rupee coffee. You're just going to whip out your phone, scan a quick QR code, and use UPI. It's instant, it's built for convenience. But what if you're putting down, say, a 5 lakh rupee deposit on a brand new apartment? Yeah, you're absolutely not using a QR code for that. For a transaction that massive, RTGS is your guy. It requires a minimum of 2 lakh rupees and gives you highly secure real-time settlement for those big-ticket assets.
Or picture this scenario. It's midnight, and you urgently, and I mean urgently, need to send 45,000 rupees to someone. You'd jump on IMPS because it processes instantly 24/7, even when the banks are completely shut down. But what about your monthly rent? For that, NEFT is usually the MVP. It processes in 30-minute batches, so there's a slight delay, but honestly, for a scheduled, non-urgent payment like rent, a small wait is perfectly fine.
All right, Section 3, behind the screen, PSPs and TPFs. Now, the key to understanding how all this actually works is knowing the difference between two major players. First up, the PSP, or Payment Service Provider. The best way to think about the PSP is as the underlying banking highway. It's a highly regulated bank that connects directly to the central UPI switch. Basically, the PSP is the heavy lifter that actually moves your money, deals with all the strict regulatory compliance, does the KYC checks, and keeps all that data localized and locked down tight. And on the flip side, we have the TPAP, or Third-Party Application Provider. So if the PSP is the highway, the TPAP is the car you're driving. It's the sleek, super user-friendly fintech app, think Google Pay or PhonePay, that you're actually tapping on your screen. The TPAP isn't actually a bank. It's entirely focused on giving you a great user interface. It just partners up with a PSP bank to get your money from point A to point B without a hitch. And when they work together, they create this beautiful, seamless, 6-step journey that literally happens in the blink of an eye. Check this out. 1. You hit pay on your TPAP app. 2. The app shoots that data over to its partner PSP. 3. The PSP authenticates you and routes it right to the central NPCI switch. 4. The NPCI figures out the recipient's bank. 5. That receiving bank credits the funds. And finally, step 6, a little success message zips all the way back to your screen.
It is just an incredibly well-orchestrated dance of data. Next up, Section 4, the infrastructure of success, building the rails.
So, zooming out for a second, UPI is actually just one piece of a much larger puzzle called the India stack. And at the very foundation of this stack is Aadhaar, which is India's national biometric identity database. See, before Aadhaar, a ton of people simply couldn't open a bank account because they didn't have verifiable ID. By linking biometric identity straight to financial services, Aadhaar created this solid, trusted bedrock that made something like UPI even possible. But we also have to talk about the catalysts, the major government pushes that really got this fire started. We're talking programs like Digital India and the VaratNet project, which were designed to systematically wire up village councils with broadband internet. You combine that kind of physical infrastructure with telecom market shakeups that made 4G smartphones and data plans incredibly affordable for rural folks, and suddenly, you've got a massive, fully connected population totally primed and ready to adopt mobile payments. Which brings us to our final part, Section 5, Global Lessons in Inclusion Beyond the Tech. I really want you to think about the sheer scale of this number, 1.4 billion. Back in 2014, India had roughly 400 million bank accounts. But by 2023, largely thanks to this whole digital infrastructure, that number exploded to over 1.4 billion. That is just a staggering leap in financial inclusion. We're talking about bringing hundreds of millions of previously unbanked people directly into the formal economy. And that leads to a really profound social impact. Look at this quote directly from the Asian Development Bank's research. Digital financial services, enabled by UPI, have contributed to reducing gender disparities in financial access, with about 55% of the new account holders being women. Honestly, this is huge. It proves that the real power of this tech isn't just about grabbing a coffee faster. It's actively closing the gender gap in formal banking and handing real financial autonomy to millions of women. So where do we go from here? Well, the Asian Development Bank actually looks at India's journey as a highly scalable blueprint for the rest of South Asia, and honestly, even beyond. But to make it work, other nations have to tackle some big regional hurdles. Things like low digital literacy, limited merchant acceptance, and low smartphone penetration. But if they can, there's a massive opportunity for cross-border interoperability. Just imagine effortlessly using your local payment app while visiting a neighboring country. Plus, harmonizing digital regulations across regions could be a huge boost for trade and tourism. All of this leaves us with one really fascinating question. Can the rest of the world actually replicate India's digital blueprint? Will other developing nations be able to weave together government infrastructure, biometric identity, and private fintech innovation to hit this incredible level of financial inclusion? It is definitely going to be an exciting challenge to watch over the next decade. Thank you so much for hanging out with me for this explainer. Keep learning, keep asking questions, and I will catch you in the next one.